Hey everyone, Coach Investor back to another video for today. So let's talk about the most important points that were mentioned during Nvidia's earnings call. Now, the numbers, the earnings report, we already talked about in another video that's going to be in the top right corner. But during the call, some interesting comments were made for the short and long term. Now, we know that the gaming segment is not just gaming. It has a lot to do with cryptocurrency and more specifically crypto miners. So they did say here that, well, their GPUs are capable of cryptocurrency mining, though they have a limited visibility into how much this impacts their overall GPU demand. Volatility in the crypto market, such as declines in cryptocurrency prices, verifying transactions including proof of work or proof of stake, whenever Ethereum is going to change that, nobody really knows. So ultimately, they are unable to accurately quantify the extent to which reduced cryptocurrency mining contributed to the decline in gaming demand. And this is a big issue because this is probably going to go on for another quarter or two or three. And it's important to note that this is not a pure gaming issue. This is a cryptocurrency issue. The gaming aspect is actually doing quite well, as we're going to look in just a bit. But they did also mention a $1.2 billion inventory charge. That's one of the main reasons why gross margin GAAP and non-GAAP decreased quite a lot. They say here the $1.22 billion charge for inventory and related reserves is based on revised expectations of future demand, primarily relating to the data center and gaming. Very interesting that they mentioned first data center and then gaming here. The charge consists of approximately $570 million for inventory on hand and approximately $650 million for inventory purchase obligations in excess of their current demand projections and cancellation and underutilization penalties. Now, there is obviously also a bit more positive news with regards to gaming, but before we go into that, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor and make sure to check out all the other links in the pinned comment. So, like I said, there is some positive news here as well, as Jensen has mentioned during the call. So the sell-through, as he mentioned, of GForce is solid. By the way, with regards to GForce, the members are now around 20 million and there is around 1,350 titles there. Now, going back to what he said, the end market gaming demand is solid. It's obviously off the highs, which was really high recently in the beginning of the year. And so what they have done, the strategy is to sell well below true levels in the marketplace. There is sell-in and sell-through. Sell-through is basically the percentage of sales through retailer, sell-in from manufacturer to retailer. He says here we'll do that for a couple of quarters or so don't expect this to be done next quarter. But more importantly is their sell-in rate is far below what is happening in the market for sell-throughs. The sell-through is solid and increased 70% since pre-COVID, and so the gaming market is really quite vibrant. It's also important to note that a lot of new products are coming later this year, early next year as well, RTX 4000 for example, so we might see some upgrade cycles sooner rather than later. Now, with regards to guidance, they expect revenue to come at $5.9 billion in Q3. That's down 17% year over year, but they do see sequential growth in data center and auto, which is a positive. Now, if you do the calculation, data center plus auto plus OEM and other business will be around $4.25 billion. So this is obviously from this quarter, right? But if you do a little bit of calculation, you expect data center and automotive to grow a little bit. Then you might find out that gaming and professional visualization, which is also very, very tied to, well, upgrade cycles, etc. Because everything you use there, you can use for 3, 4, 5 years. Now, depending on how inventory goes with those customers, we'll see an increase or a decrease in that. But let's say there is a little decrease in professional visualization and then there's an obvious decrease in gaming. So that segment should come in, well, both of those together should come in around $1.5, $1.6 billion. A huge decrease. Now, with regards to professional visualization business, Colette said here that there is solid demand. They just have to correct some of the inventory, but they still see both the opportunities that they have created for the market for these to be long standing. Now remember, all of last year doubled the size of professional visualization in just 1 year. And as for Nvidia's gaming revenue, so like we said, next quarter expect gaming and professional visualization to be around $1.5, $1.6 billion, which means that the gaming segment will be what, 1.15, 1.16 billion? If you look at the history of Nvidia's gaming revenue, that would mean that it will go back to Q1 fiscal year 20, which is very important because, well, next time we have a huge crypto bull run, let's say, and then we have a huge sell-off, then you can expect the same thing to happen again, as we've seen in 2017, 2018. Now we'll end on a positive note. Investing in Nvidia, you're not just investing in a GPU chip. No, you're investing in a company that has a foot in the gaming industry, data center industry, automotive industry, AI, metaverse, etc., etc. Crypto for the good and bad as well. So look at it for the longer term. And to be honest, the stock really needs a bigger pullback because it is still pretty expensive. If you look at the multiples, if you look at the earnings, it is expensive. And right now, although some of these segments are growing fast, the overall business, not so much. So to conclude, long-term investors should rejoice a little pullback in the stock so they can build up their position, maybe even add more. Traders will enjoy the volatility, but overall, this quarter, obviously no surprise anymore. Remains to be seen if they can do better than what they expect in the coming quarters. Now, obviously, do share your thoughts down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you aren't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next one. Bye-bye.